Well, I think there's so many cross currents in this market. I've been cautious on the market, as you know. Every analyst in the world is looking for this year-end rally, which means that the world's too optimistic. So what we had a major change this week with Powell from the Fed coming out and saying, hey, transitory shouldn't be in the language anymore. And then he doubled down the next day in the hearings when people were looking for somewhat of a backward pedal on it. They didn't get it. So, as I said, it was doubling down. They did a jobs number today where the top line number was a miss, a big miss. However, the underlying numbers were good. So if I sum it up this way, you've now got a market that is half empty rather than what's driven it, which is half full. You have multiples that were just inexplainable how they got there. And so now the market is retracing and it's taking him down. So I don't think this is the end of it necessarily. There'll be ebbs and flows. We'll bounce like we had a bounce yesterday. But overall, I don't see anything wrong with taking some off the table and having cash. And I know you don't sell in down days, and frankly, I haven't been doing that. But I've had cash and buying. But it's too early just yet. We'll know in a week or so, because in a week or so, we'll have inflation numbers, we'll have the Fed meeting, and they will be pulling tapering forward. Make no mistake about that. And we'll also have the data on what the new variant is. Is it very dangerous? We know it spreads more, but how dangerous is it? So that's all coming next couple of weeks, and that could dictate what happens through the end of the year. But markets do go up and rates go up. They just don't go up right away. It takes a while to absorb it. So I continue to be cautious despite the sell-off.